We're talking long-term fundamentals with Peter Hug today. He's the Director of Global Trading over at Kitco Metals. Pete, happy to have you back on. Nice to see you.
It's good to be here again, Danny.
So let's just start with a broad overview since it's been a while since we last spoke. Is the economy really as strong as some analysts believe, or are you seeing some cracks?
I don't think the economy is as strong as some analysts are seeing. I think it's actually weakening, but I think it's the best economy of a group of economies when you include the Eurozone, the Japanese market, and certainly the Chinese market, and even including the Canadian market. So from a perspective of an overall basket, I think the U.S. economy is still the strongest player on the field, but I do think the U.S. economy is softening and will continue to soften through 2019.
Okay, and in the past, Pete, you have said that your view is a dovish Fed throughout the year and a lower dollar later this year. Do you feel that means investors should be defensive and buy safe haven assets, or do you think it's too early?
Well, it feels good to be vindicated. We came out last September and indicated that we believed the Fed would not raise at all in 2019 when the Fed was still talking about 3 increases for 2019. So yesterday's meeting vindicated our projection that we put into the market in the early fall of last year. And we were very constructive on the gold market at that time. Gold was trading around $12.80. We suggested going long the gold, and we have stayed long that position until yesterday. With the spike after the Fed announcement, which was extremely dovish, to the 1317 level, which we considered resistance, we exited that long position. And right now I'm a little bit cautious, and it's not that I'm negative gold. I think the gold price is still constructive. But I want to watch now the action in the equity markets, because this Fed announcement yesterday that they are not going to raise for the balance of 2019, they're going to reduce their bond purchases starting in May, is extremely dovish. And I want to see where the capital flows. If it flows into risk assets, i.e. the stock market, that could put a little bit of a roadblock on gold in the short term. So the key now is the dollar, and we need to look at other things. Brexit looks like it's going to be delayed now until June. The Chinese trade war issue seems to be sort of being pushed forward as well. So there's no real urgency here to be jumping into the gold market. So I'd like to see gold close above 1322 before I initiated another long position.
Well, you mentioned the possibility of a no Brexit deal, the trade wars with China, a possible recession. If I had to ask you to assess, those, which do you feel are the biggest risks right now to the global economy?
Well, I think Brexit still is the top risk. I think the trade deal between China and the U.S., there'll be some type of a deal, and then both sides will sort of jawbone that it worked out well for both of them. But I don't think there will be anything substantial done on the trade deal between the U.S. and China. I do think there'll be some type of an announcement over the next 30 days to alleviate some of the pressure. And again, I think that might then spill into another leg up into the equity market. So I'm having difficulty at this in the short term coming up with a catalyst other than Brexit, which could have a major disruptive influence on the European system. Other than Brexit, I don't see a major catalyst for gold to move up substantially in the short term, unless the dollar gets nailed. And I just see the dollar sort of moving sideways. I don't see the dollar under significant pressure probably until the second half of this year.
All right, shifting gears now, Pete, as you know, I've just come back from several back-to-back conferences, and I've had guests telling me that copper, on a supply-demand fundamentals basis, has the best potential amongst the metals. Do you agree?
If you believe that the global economies have turned the corner, and by that I mean the European and the Chinese economies have turned the corner, I would tend to agree that copper has considerable upside from these current levels. If the global economy slows down and the U.S. also slows down and we go into closer to a recession mode, I'd be careful with copper. I'd be constructively long the position now, but I'd be trailing stops up behind my long position just to protect myself for a correction.
Good stuff. Peter Hug, thank you so much for joining us today.
You're welcome.
And thank you for watching. We'll see you tomorrow.